Hi, Gery. Thank you so much for joining us on the podcast. I'm here with Dipesh today, my co-host, and we're excited to dive into some topics all around entrepreneurship, Web3, and building a company. But before we get started, I'd love to have maybe a quick introduction to your background and your journey with Blocktorch. And yeah, would love to dive into it.
Thanks for having me. Thanks, Maddie. Hi, Dipesh. So quick intro about myself. I actually have a business background. My first job was with Apple in Europe for 3 years. Decided to then join the venture capital world, which really kind of was my introduction into the startup world overall. And during that time, when then also COVID hit, I decided to also learn to code and kind of like upskill myself. And due to like passion and my friends being in the space already, I around like 2019 started to dive really deep into Web3 from like a user perspective, but also from like a technology perspective, personally, as well as then also for my job as a venture capital investor in Europe. And from there, I then decided to switch the sides of the table and try myself as a founder, which was the starting point of Blocktorch together with my co-founder, Amin, where at that time, we really kind of saw that the teams in Web3 start to use third-party service providers when it comes to infrastructure, and do not kind of like build everything in-house, like from like running their own nodes to all the other services that they might be using. And so with that, we saw the need of tooling that actually monitors these third-party services that people are using across their stack to then understand where do any root cause lie for any performance issues or security or health checks that might impact the users. That was early 2022. We then raised around a seed round, basically beginning of 2023. We by then have scaled the team to a couple of people, have launched the product. And yeah, that's basically the journey how Blocktorch started. And I think we're going to dive into it in later today. But today we are part of Thirdweb. So basically fast forward 2.5 years later, we have managed to also exit to a larger player in the space and trying to grow the pie all together.
Fantastic stuff, man. I mean, I'm just actually just super excited. You know, the fact that you've also self-taught, self-coding, and sort of dived into the world of Web3, it just so resonates, right? It's just I didn't know this part. Maybe I don't know if you spoke about this and forgot about it. But okay, so I just joining the dots. You said, okay, we were observing that a lot of Web3 players are basically using third-party infrastructure services. And for example, running the nodes. And then you said, okay, fair enough. There is an opportunity over here where I can provide service regarding analytics of the transactions. Right. But what to understand essentially, since then till this date, what has been this? Have you observed any change in the behavior from sort of all angles, right? Essentially, the market size point of view. The other is that has analytics itself become complicated, and essentially are the Web3 applications or developers still diving into these different analytical tools and how they're extracting value from the transactions that they are doing?
I think there are like two aspects to the question. So one is the overall market question. And of course, when we think through from beginning of 2022 to now mid 2024, lots have happened in the space. Not only has the technology stack evolved rapidly, when we think about account abstraction and layer 2s and layer 3s and many other technological innovations that happened throughout that year or throughout the 2.5 years, but also the overall market downturn through 2023 and then kind of like to a certain extent recovery again, of course, led to very, very different situations throughout this journey. I would say in general, when we started, we saw a lot of like people not being fully sure what even to observe. Like block explorers literally have been the only, let's call it data accessibility tool for people to actually see data on chain. And from there, then Dune started to actually, throughout the last bull market, to have a large hype, which I would say led to the biggest kind of widest adoption in terms of, we can actually run some analytics and we can actually see some data and create charts and dashboards out of it. And our segment was very, very DevOps focused and very, very developer focused and less, let's say, like user analytics focused. And there also, we definitely saw a certain kind of maturity over time of developers first experimenting maybe with the stack in general and actually building their application to trying to professionalize the way how their DevOps structures work. Also some decentralized applications, of course, having seen way more load and adoption and traction throughout the end of the last full cycle. And I would say now slowly starting to pick up again as well. And with that, naturally, the amount of issues in your software usually increase. And once fire is on the roof, basically, people start realizing, okay, we need to somehow make sure we keep track of things.
Okay, so extending this one, right? So you witnessed, let's say, a journey of the user itself, right? There are, probably a developer in 2021 is now either looking for different or a much more advanced analytical tool, essentially 2024. So I'm trying to join the dots, like from the market segment itself, get in front of, these developers. How have essentially Blocktorch positioned that, okay, this is a particular problem statement, how it impacts you, and how essentially your roof wouldn't get on fire, but if you're not looking at it, and then you need to solve a problem.
Yeah. So I think the answer is yes. We've seen the developers in the space maturing, which I think also comes with time and experience. Looking into some reports, for example, one can clearly see that throughout 2023, and then also with like AI, that the hype really setting in. Lots of like the developers that just joined very recently towards the end of the last bull cycle, they kind of rather left the space again. And so the ones that sticked around are the ones that tried the space maybe 2-3 years earlier. So now they have like an experience of like 5-6 years building in the space. And I think the pure effect of them almost doubling maybe their experience of building in the space versus when we have initially started Blocktorch leads to the fact that they are way more mature in how they build the software and how to build decentralized applications and monitor their stack. I think from a positioning side of the company, at the very beginning, we have been very, very focused on in-production use cases. And simply due to like the nature of how the market evolved over the time, we decided also to go more horizontal and also earlier in the developer lifecycle to kind of like be a partner to these builders from the earlier days when they actually start building and not only when they launch into production, which also led to kind of like then the conversation at the end of the day with Thirdweb of joining a more full stack horizontal platform versus us building it out all from scratch and trying to fully compete with players that already have a very mature and horizontal developer tooling stack.
Okay.
And so with building Blocktorch, in order to get from idea to exit, you have to build, I guess, some form of stable revenue and show traction within the product. How did you think about acquiring your first 5 customers, and how did you put that strategy together?
So the first 5 customers we literally acquired basically by going to ETH Amsterdam in April 2022. Amin and I have been working on this idea for a very short period of time back then. We got to know each other through an incubation program called Entrepreneur First, which maybe you might know being from London. And we have met in Berlin, like the cohort of Entrepreneur First in Berlin. So kind of like a couple weeks in, we were like, okay, there actually is this hackathon happening in Amsterdam with this conference. Let's just book a flight and go there. Let's see what we can get out of it. And we just made sure to get in front of like a ton of people. And we built a couple of relationships back then that really have been pivotal for the rest of the journey. And yeah, we made sure we have as much touch points there as possible. And then kind of from there, built out our first couple of design partnerships. We had not a single line of like even Figma file back then. So it was really a pure idea drawn on some windows. And then we went from there.
It's very organic. I like it.
Very organic indeed.
On that note, Dipesh has told me incredible things about your guys' relationship. So how do you think about building relationships, particularly with customers? Because it seems like you're quite good at it.
I think at the end of the day, I mean, maybe coming back to the relationship with Dipesh, I think that's also kind of like a founder-to-founder relationship where sometimes it just makes sense to open up, even if that might, for some people, feel like showing vulnerability. But like at the end of the day, building a company is kind of like not an easy ride. And usually it makes sense to share some thoughts and ideas and brainstorm and just even feelings and emotions with one each other, right? On the customer side, I think at the end of the day, it all comes down to understanding that a relationship is always successful if both parties benefit from it, and not to try to just bluntly extract value from one each other. So I would say that's one of the things I have learned very early on when I had my first job at Apple, I said, where we had those sales trainings that I haven't had to do because I wasn't on the sales front, but kind of like I was one of the people in the office making sure that the sales compliance is met. So I spent time with what these training materials actually are. And this was really all about understanding what does the customer need and what does the customer get out of it. And so it might be different for one person versus the other, even though the product they might be buying is the same, right? And I think this is an extremely important piece of the whole sales process, is understanding, okay, what is actually the problem that the potential customer faces, and then going from there.
Be genuinely interested.
Yeah, exactly.
So I have this sort of in relation to this itself, right? When you're talking to customers or sort of business partners where you're sort of trying to look at integrations, right? And then just joining the dots with a founder specific problem, which is basically the 3 golden letters PMF, which keep circulating around you. In some parallel universe, you can either never achieve PMF and you're always chasing this golden state, right? What essentially want to understand is, okay, there are these Web3 companies, and in Web3 particularly, I've seen partnership is sort of much more important than in Web2 or any other industry, right? Everywhere else it's probably called business or clients, but in Web3, partnership is just another segment, and it sort of takes more priority, essentially. There are more integration announcements and stuff around that. How do you join the dot, or how did you feel about that? Is integration and partnership equal to PMF, or they're not, or are they just another, I'm just turning a page over and there'll be a PMF round just down the book? Were you able to ever or sort of see any completely contradictions that these are not, I'm clearly going on a different path, essentially?
So my very honest personal opinion is that lots of these partnership announcements that we see on crypto Twitter are vanity. Like, they're purely there to show some progress, get some mind share, and have something to post about.
Right.
I think that's one part to the answer, that I personally do not think that there are any signal of product market fit at all. I do think relationships and partnerships are super important for growing the pie together and for making sure that one can together tackle this very fast-paced market, and also not big market at the end of the day, right? I think we still need to be honest that the Web3 market still is a small market compared to Web2 at the end of the day. And so I think they are pivotal to actually being able to grow the pie together and making sure that the market overall grows. Unlike the pure finding product market fit question, I think at the end of the day, many startups, at least that's how I personally felt it, and also what I've seen while I was a venture capital investor, and also when speaking with other founders, I think many founders feeling a certain kind of, let's call it paranoia, that one might not find product market fit, or kind of like it's very hard to distill. I've heard some interviews, I don't know if this is true, but apparently once you have product market fit, you know it. But then I've also literally spoken to some founders that have built unicorns already, that said like every single customer still felt as if it might be the very last one. So it kind of like chased them down, that maybe it's not product market fit after all, right?
Right.
And then in a Web3 market, which is a market that changes very rapidly, I think product market fit can just, I don't know if it can be achieved right now today, even in like the classic sense, or if it is a constant reinvention of the product and the business model as the market evolves so fast.
Fair enough. That's true. The Web3 ecosystem itself keeps undergoing these dramatic changes every weekend. When I try to catch up with crypto, I'm like, okay, is it time to hang the jacket because I don't know what's happening.
Every time you take time off, then the Web3 market completely changes.
Yes. I'm not, maybe a slight sort of digression, but again, I don't want to take too much of this one time on the PMF particularly, but there was this podcast done by Haseeb just I think a month back, and I shared this with Maddie, right? And essentially, they're talking about the use case of Web3, more or less. And obviously they're talking market size and multiple things. They're talking about crypto social as thing and Web3 gaming. But essentially it boiled down to, okay, what essentially is the real world use case of Web3? And somewhere or the other, it just bluntly came as that, we don't need to find the use case of Web3 because the use case of Web3 has already been discovered, which is practically trading of digital assets. That is essentially it is. And then from that point, they also bounce onto from a investable segment of the question is about whether Web3 project is investable. Then it has to be dealing with infrastructure, like they're building either an L2 or a bridge or something like that. And he said that's what practically is the Web3 use case. Now, do not try to over-engineer this and try to say that, okay, Web3 should be doing something very jazzy thing and, we are still at a nascent stage. Do you have any thought on this line of thought?
So in my opinion, the general use case of Web3 is literally being a backend that is decentralized. So I think in general, it's a technology that is being used for building use cases on top of it. And the technology itself is not the use case. I think, yes, one use case is using certain kind of like building economies to a certain extent within products. I assume I've been too young back then, but like when the internet came out or like when the cloud came up, I doubt that anyone had the idea that the real use case for it is to share short video clips around the world or to book an Uber ride. Like, I think that wasn't anyone's thought that this is the use case. Like, the sharing economy is the use case for cloud. I don't believe that anyone back then could foresee that in that sense. So I do believe that we're going to see much more utility applications and in general use cases built on the decentralized backend, with it becoming more accessible and cheaper. And at some point, it might even outperform the cloud. Who knows, right? So I think the actual use case is having a backend that is decentralized. And then there are a couple of use cases we see already today that comes out of it, like being able to have economies created, being able to own your data in a certain extent, and combining it maybe with the economy you can create with it. But I personally don't think that we can really foresee what people in the future might come up with in terms of what can be done with this tech.
Understood. I know. So from a founder point of view, right? And if I try to take a step back, there's Web 2, which is this huge play which was there with the internet. Somewhere a part of Web 2 itself. And then there's Web 3, which again is just an advance of Web 2 essentially. What is the category from a startup founder point of view? What is this categoric thing that you would recognize? Okay, these are the things you must be aware of, which is very specific to Web3, which is not common otherwise. And be prepared for this, and then what ways you think either you've kind of figured out that this is the way it's best handled, or for some that I have not been able to figure out how best to handle them. But these are the questions that will come sort of haunting you when you're on this journey.
So not having been a founder in Web 2, I can of course only say kind of like what I've experienced in Web 3 and what I know from founders in Web 2, having worked with them or just being friends with them. But I would say there are two main things that I believe are very specific to Web 3 today. One of it is the speed of the space evolving. It's just really, really fast, as we have said before. Like L2s, like last year, literally a year ago, it was a topic being discussed, basically, like with first people venturing into it. And now we see literally every other day that another team is announcing that they have launched their own chain. And so I don't know if there is any other market where such a shift from a concept being almost discussed. I mean, it wasn't theoretically like it was already a thing a year ago with base already being live and so on. But I have to say, like, I think from kind of like experimenting maybe with certain new trends to them being the thing in the space, I feel like in Web3 is a very short cycle. The second part of it, I believe, is the fact that, and we also touched upon that before, is that it's such a remote kind of industry with people being spread across the globe. You might have calls with potential prospects that never turn on their camera, that use some tooling that changes their voice, that use some acronyms for their names. You might not be able to connect with them on LinkedIn because they only have a Twitter profile and a Discord profile. Like, I think it's an interesting crowd of people to a certain extent that is active in the space. The whole DJing culture by itself, I think, is a very unique thing as well in Web3. And so I think this is something one needs to get used to maybe. And then how to deal with it also, I think, is going to in real life events makes such a massive impact in Web3 simply because you might have spoken with someone over a call for like 3 times and they said you might not know how the person looks like. You might not know what the real voice of the person is. You might not even know the name, but then when you actually shake the person's hands, suddenly the relationship really changes and you feel like, okay, now you start actually building a relationship, which you have not even been able to do before.
So if we now switch it, I guess, to more of the fundraising side of things, I want to kick off by asking why you made the switch from VC to founder. I've also been on both sides of the table, so I know what it's like, but I'm curious as to why you made the switch.
I would say the main reason when I really decided, okay, I'm now going to make the switches, I said I started to learn to code during the pandemic and I very much enjoyed it. So it was like this kind of piece of creating something, working on something where you have like this very fast-paced feedback loop, literally on an intraday basis. On the one hand, because you just maybe write some lines of code and they don't work. And like, so you have a bug and you need to debug it and then you make it work. And it's like a small moment of success to speaking to some potential customers or users and trying to figure it out. And kind of like this assembling the plane as we basically jump off the cliff has like an extremely fast-paced loop, right? With the VC job on the opposite having a very, very long feedback loop where if you do your job, basically you often don't know for years if you're actually making decisions that are correct, right? And especially coming out of the pandemic back then, where it was a lot of isolation and kind of like everything shifted to everyone sitting at home, I felt very much the need personally to work on something that gives me a faster iteration loop and a faster feedback loop and kind of like a stronger roller coaster experience, which the founder journey simply is, right? That was one part. The other part was also the pure passion and kind of like deep interest and belief that Web3 can make a difference and is a technology that is here to stick and that I want to kind of contribute to it as well. And I personally strongly believe already today we do see the impact for countries with very high inflation, for example. If you look into like Turkey or Argentina or African countries, for example, stable coins, they do make a massive impact on the people there, right? And same as, for example, the internet changed access to education. Suddenly everyone can learn and suddenly everyone can access this vast amount of information out there. I think, for example, Web3 might be able to really enhance the speed of the development of the gig economy maybe. And suddenly everybody can work for anyone in the world and can get paid on the same fair terms and give you back ownership of your data. And so I think there is just a lot of opportunity in the technology and what Web3 can positively contribute to us as a society.
So essentially wanting to get involved and actually building the ecosystem rather than just investing in it.
Exactly.
Yeah. And what do you think most founders get wrong when raising their first round of investment? And this could also be specific to Web3 as well.
Specific to Web3, I think a lot of teams just think about like a token as the business model, which I believe is not very sustainable. Yeah. So that might be one thing. We haven't chosen that path, and who knows, maybe it was right, maybe it was wrong. But I think a token as a pure business model is something that doesn't make too much sense, especially if the token has no other meaning than being a token. And I think another piece, and that's not only specific to Web3, is that a lot of founders, especially for first-time founders like us, they rather chase the money first than kind of like the proof points for product market fit, thinking that the money is going to figure it out. But the money is not kind of like going to figure it out, right? The money is just a tool for then figuring it out. So in economics at university, you learn that basically prices are, or certain kind of indicators are lagging indicators, and then others are actually leading indicators. And I believe a lot of us as founders think money, like we see money is a leading indicator, but we see money really is a lagging indicator. Like if we do our job right and we manage to de-risk on certain fronts, then we will be able to raise investments to then de-risk further, and not the other way around.
I think the token one is a big one, because I speak to a lot of founders and it's so appealing to just like start a token round because you're going to get investment quicker. But what I've found with teams that I've worked with is you then actually have to execute on the token. And then you're trying to fit a token into a business model that doesn't necessarily need to be there. And then you're kind of stuck as a founder, especially when you have a live token as a founder. You're essentially taking your company public at like a seed or Series A stage, and it just adds immense pressure. So what should be the balance between like building the product, networking with investors? Like as a founder, how should you really be spending your time? Because there's so much advice out there and it all contradicts like each other, and there's like no source of truth. How did you balance your time, and when do you build relationships with investors? Is it before you raise, or what was your thought process with all that?
In general, I think there is no recipe to it that applies to everyone. As you say, like there is so much advice out there, and like also there's not only a lot of advice out there, one also receives a lot of like advice from people one asks for advice, and even from people one might not even ask for advice, but they still give you advice, right? And so I think one general rule of thumb is that a lot of it is rather noise than signal. And maybe even what I'm saying right now is rather noise for a lot of people out there than signal, because it really depends on where you are in your journey, what you're building, how you are as a person, what your team is set up in. So I think it really is a case by case journey, and there is no kind of like one recipe fits it all. Having said that, I think it's important for a founder to spend as much time with customers and like potential customers as possible to learn from them, and then being able to translate it into a product. Once you start building a product, it creates technical debt, right? So once you start kind of like investing into building the product, it will mean that it potentially will slow you down on being agile enough to shift gears quickly, unless it's like a very kind of like flexible modular product, maybe, where you do not need to invest too much time in building it, which comes with the difficult decision of, okay, but at some point I will need to have the product, right? Because if I spend time talking to customers, and especially if it's like a more deep techier product as what we have built, Dipesh and also us, it means you will need some time to actually build the product, right? And I think that's really where also the team comes in, and like how you split your time within the team, and then how you create feedback loops between you to ensure that you relay the information and the learnings that you had with customers back to the team building the product, and also the other way around. And with regards to building relationships with investors, I don't think one needs to build a massive amount of time on building those relationships. Again, if you do a good job and like you build something that is interesting and that meets customer demand, investors will start to get familiar with you. They want to meet you. And then I personally always believe it makes sense to build a couple of very strong relationships versus lots of shallow relationships. So I think then it's the right time to double down on like making sure you get to know these people very well, and maybe rather a handful of them versus meeting at happy hours with 100 of them every other week. It's like, I'm not sure if that leads to any real relationship at the end of the day.
It reminds me of, I'll hand it off to you in a minute, Pesh, but it reminds me of Naval has that quote where he's like, if you just build something interesting people will come, rather than spending all your time networking. But Dipesh, I was going to ask you as well. I mean, you've also raised around. Like, what was your experience like? What do people get wrong?
What do people get wrong? Actually, it's almost the same thing. So I agree. One thing, or at least I agree because it happened with me, is basically, yes, it's not in my DNA to sort of float around at a lot of places and, having a lot of drinks and build a massive network. And I still don't have that. Interestingly, I'm based out of Singapore, based in over here for the last 11 years, Web3, been in Web3 in this ecosystem for the last 6 years. I still don't know so many people in Web3, which are here in Singapore. And so I'm not a massive network builder. But I also, for me, it's fundamental that, okay, if I do a good job, it should basically do its talk and, things should just flow through. And for me, it worked out that more or less this particular mantra worked out even in fundraising. We just did a good job. Then one guy liked it. And then he said, well, what, I'll go ahead and invest. And I'm going to, sort of introduce you to someone. And then the dots connect well. And it worked. And I was about to say the same thing, because one thing that I did, now this is me, completely like personal and like extremely, I would like to put, 10 asterisks over there, personal to me, is when I was raising capital, and even today when I speak to a couple of people, when we are raising capital, we will do a due diligence on the investor at a very thorough level, essentially. Like, I don't want to shake hands with someone whom I will either not respect, or will some being in the cap table just completely screw things up in the future, right? So even if this person is throwing money, do not take money. Where is my mantra in that sense? That, and I tell that to some of my friends, that if you're not desperate, and try to be in that state where you're not desperate. If you're not desperate for the dollars, don't take money, because sometimes wrong money does go through your table. And if you tap on that, I think there are more, there is a big downfall over here, then you'll be able to save. Yeah, there are more battles to be fought then.
I think it actually can be compared very nicely to dating. So there are a lot of pieces that are very similar to dating.
I love that.
I think so one part, for example, warm introductions. If you go dating and you meet the other person through a friend, you have that kind of like social acceptance already that person cannot be completely crazy, right? Because it's a friend of your friend, kind of. Same for getting to know investors. If it's a warm introduction, it's a little kind of like, it's a bit of a head start in the relationship, because you have that kind of like social proof that another founder I like to work with that we see already, and vice versa. Same again with like the amount of people that you meet. I think if you go out and you start dating and you just meet with like 200 people, like it might get hard to figure out kind of like, okay, who is the one that you can really build a great relationship with, right? And also what I see a lot of founders do, I saw it as a VC, and then now still being kind of like asked by many founders for introductions and so on, is like, they don't think about what they actually need. And so it's as if you would start dating and you actually have absolutely no idea of what person you're looking for. It's like, you just try to speak to everyone on the street. It's like, probably this is not the kind of best time of use of your time, right? It's like going on the subway and just speaking to everybody. Maybe you should have like at least a certain kind of understanding what kind of personality you're looking for, and like what age range and things like that, right? So I think it really can be compared to a certain extent to dating. And then, as Dipper said, like if you're very, very desperate, like probably it won't lead to too much success, right? So I think this is kind of like a mental model that one can draw some comparisons.
It's a bit like supply and demand. Like, because Dipesh, what you do when you evaluate the investors, it then puts you in a position of power in a sense, because you're not chasing them to a massive extent. Whereas, I mean, I'm sure we've all been chased to some extent, whether it's sales or whatever, and it just comes across so much more needy. Whereas if you actually take a step back and you're more evaluating them, and if they're a good fit for you, it kind of shifts the dynamics, and then it makes the other person want to like work with you more.
Yes, but I don't play it for that. I don't play it for that. But yes, it does. I suppose it does have an impact when you kind of, they're playing maybe a hard to get kind of a thing. Yeah.
Same as with dating,
Yeah, exactly. I do want to shift the subject slightly towards your exit. And like, this is again a massive like mystery for a lot of founders. Like, there's probably questions like, how do you get from idea to exit? What is that process like? Why did you exit? I guess would be a great question to start with.
Yeah. I think actually the word exit is kind of like misleading because it sounds like an end to something, while for us, I would say it almost was like a beginning of the next chapter simply. So we have, as I said before, we had that kind of like point in time where we said, okay, we need to go more horizontal and earlier in the developer lifecycle. And so it was a strategic decision for us also, how can we achieve that? Do we need to completely pivot the product? Do we need to raise a lot more funds and build out a massive team and then just build it all at once? Do we kind of like start from the very beginning of the developer lifecycle and then slowly go more horizontal? Do we partner with someone and if yes, to what extent? And so when then we had the conversation with our investors and we had the conversations internally, and then we had those initial conversations also with Thirdweb, where it simply was very complementary and it made sense to us. And then all the stakeholders were aligned that all the effects of such a transaction is what they would like to pursue. And so for us as a team, what was the effect was that we are part of a large team with more resources, working on this horizontal platform, being able to grow the pie, to have that impact on the wider space in general. And so it made sense. And for the investors, it also had an outcome that was of their interest. So in general, it simply made sense. And then I said, like, I don't like to call it exit in the sense that it sounds like something that now comes to an end. And I'm sitting on a yacht or whatever. It really kind of like gave us, I would say, as a team, a boost to be able to achieve even more with our mission of making Web3 a technology that is widely adopted and enabling builders to build in Web3 and make this easy and equip them with the right tooling to achieve their goals.
And what was that process like for you in terms of going through the like exit process itself? Was it smooth? Was it difficult? What should founders expect?
I think also there probably like every situation is unique. That would be kind of like my assumption. I think one can probably never force it. It kind of like same as with actually starting maybe a company or then being able to grow it is like you need to have the right puzzle pieces happening at the right point in time. You need to reach the right people. Like for us with Thirdweb, Amin and I, so my co-founder and I, we have been in touch with Thirdweb founders in the very, very beginning of our journey because we went through Build Space, Nights and Weekends Season 1, and they have been involved there as well. And so we had some touch points in the past already, and we kind of were not complete strangers to each other. And so now retrospectively, one could say like, okay, the fact that we went through Season 1 of Build Space Nights and Weekends led to the effect that we actually knew each other, which led to the effect that we then managed to exit. Can you plan that ahead of time and like 2.5 years ago that this is kind of the path? No, you can't. So I think it's also a certain kind of the stars need to align simply. And then I think another part of it is once you decide to actually follow that path and try to make the transaction happen, I think you need buy-in of doing it. Like if you start questioning around it, like you will need, it's the same as like a fundraising round at the end of the day when you have like a term sheet and everything, it still needs to be executed through, right? And there will be multiple different parties that have maybe also different interests that need to be aligned. For example, the investors, I think a very nice example is we have, for example, investors that are based in the US and we have investors that are based in the UK and we have investors based in the EU. And so they might have different tax regimes and different legal regimes, and then they might have different sectoral focuses. And then there might be maybe some people that prefer one asset class over the other, or more liquid versus illiquid, and all these kind of questions suddenly pop up, right? So if you like, it's not something that is going to happen as like a process on the side that you do not need to pay attention to. It's gonna take time. It needs dedication to make it happen from all parties involved, and one needs to manage the process to a certain extent.
How do you know what advice to take? and whose advice to take? Because a lot of things that we keep speaking about is everyone has everyone will give you their opinion for free. How do you know what opinion to take on board?
Happy to go first. So I think same as with many other startup building principles, I personally like the build, measure, learn framework. And so if one is not sure, so one thing is like, okay, if you hear an advice and your gut feeling and your heart and like your brain, everything says like this advice is bullshit, might actually be bullshit. So like, just don't even spend time thinking about it. And the other part is if you're not, like if you're thinking of, okay, could this be true or not? Try an experience, try it out, be fast with it, learn from it, move on, either double down or move on.
I agree with that. Gut takes somewhere a lot of priority for some reason. You just feel connected. But I must at least try to highlight this thing. There are certain aspects in which I know how my gut will react. And then you also listen to these advice where in a particular situation, this should not be your first move or something like that. And then you feel like, interestingly, I don't think that. I actually think the other way around. Right? So what I try to do it is I try to say there are certain areas which are my strengths, certain areas where my weaknesses lie. So for example, being a finance person and brought up in a business family, costing is very dear to my heart. I just react differently with expenses. And so what I do is when it comes to anything with, let's say, sponsoring an event or, attending an overseas conference, I don't take those decisions at all. It's my teams, they put up a vote and why they want to do it, and I let them take a decision, because my decision will be, nope, we don't need to. We should sit down and work kind of thing. So no, that's my weakness. I'll probably say no to every single dollar spent unless I cannot see a clear benefit. And sometimes you can't see it clearly. So I say that's how I distinguish. And recently, I've just gone into this, or at least taken up this leaf. As I go down to the history, so let's say if X is giving me advice and neither I sort of feel good about it or feel bad about it, and I'll try to still go down the history of what this person has done, the experience and all that thing, right? So I may be wrong by saying that, this advice doesn't make sense to me, but seeing what this person has gone through and how this person has built or, created something, then I learn, okay, my gut needs to stop taking over. I need to, this time, just close my eyes and follow. I try to take up that history lessons over there. Yeah.
I think that's a good way of thinking about it. The particular self-awareness, realizing what you're good at, what you're bad at, and trying to feel what you're bad at. Because what I've often found, especially like being a younger founder, is you want to listen to everyone that's successful on paper. But what I found with advice from people that are successful is they're giving advice from their current perspective, not from where they started. And it's really difficult because you try to implement that advice and it doesn't work for you because you're not at that point. And I wish someone had told me that earlier, where just because it worked for them or it's working for them now doesn't mean it's going to work for you.
Agreed. 100% agree on this one. Yep.
Okay. And I just want to ask, Gery, what's next for you? What are you working on right now? What's going on in your ecosystem?
So I transitioned fully into the role now at Thirdweb together with our team. So I'm driving multiple kind of initiatives at Thirdweb right now. One of it is DeFi as a vertical. Another one is EMEA as a geography. And the third one is in general kind of building out relationships with other developed tools. So that's kind of on top of mind for me right now. Having said that, Thirdweb also still is a startup. A much bigger one than Blocktorch was. But so a startup in Web3 means things change quickly. And so let's see, maybe my focus internally will shift over the next couple of months as well, depending on where we are heading, right? But so right now, I'm fully focused on growing Thirdweb, growing Web3 through Thirdweb, and taking it from there.
What's the most exciting thing about working at Thirdweb now?
So one thing that is very clearly different to the time before at Blocktorch, I think, is the fact that we are a bigger team with a more global spread and way more experience as well. And so I think that is really exciting right now, the fact we just have so much more firepower as a team in general, with so much knowledge, so much passion. That's just really, really exciting and motivating. And before, basically for 2.5 years, I've been the only person that has not been on product and tech. So no matter if it was like a sales call, a discovery call, building a relationship with a partner, running the numbers in Excel, managing the stakeholders from a finance perspective, like I did it all, right? And so now we actually have a team that where like it's more split in terms of responsibilities, and so one can focus more on actually driving impact in one specific area, and then the other person is driving dedicated impact in their specific area.
And what is the best way for people to support you, or I guess to reach out or anything like that?
So of course, all the crypto native ways. So Twitter, Discord, Telegram. No, but seriously, I think the best one is actually just sending a connection on LinkedIn. I'm quite responsive there, or just reaching out over email. And also I would say in general, I'm a quite approachable person. So if I'm at some event, like people can just come over and start speaking with me. So I'm more than happy also to just be kind of like taken aside on the street and have a short conversation.
Wow, welcome to crypto. Thank you so much, Gery, and thank you so much, Depesh, for being my co-host today.
Pleasure, Maddie.
Thank
Pleasure.
you.